Hi, everybody. Scott Riley, October 26th, the market update desk and Mortgage One. Got a lot of action happening in the market today. We've got some good news as far as pricing, mortgage-backed securities, 10-year bond. We're actually in the green today, and that's a great sign heading in tomorrow's all-important personal consumption expenditure report that will be coming out. Let's take a few minutes to break down what's happening today. So the central banks in Europe and a couple of the places gave us some good tailwind to start our day in trading. The Bank of Canada left rates unchanged, citing that the global economy is now slowing and the recent surge in global bond yields have been weighing on demand. European central banks also paused after 10 straight rate hikes. Now, keep in mind, they did start raising a little bit after we did, but this is a pause after 10 straight rate hikes, saying the current levels of their central bank rate hike will make substantial contributions to their inflation goals. Basically, the hawks are kind of pulling back a little bit, saying, hey, it looks like we've gotten to where we need to be. Lastly, they said they would use the emergency bond buying powers that they have if yields got unruly in any particular country or globally. Now, this is a preview, most likely, of what we're going to hear next week with the Fed in their November meeting. The market's factoring in about a 75 to 80% chance we're going to have a pause in rate hikes. So this pause by other central banks is probably going to foreshadowing what the market is believing, a pause next week for us. Now, there's an important thing going on later today. There is a 7-year bond auction at 1 o'clock. There was a bond auction yesterday that wasn't met with fantastic enthusiasm. So that's one thing that could weigh on our market conditions later in the afternoon. Today, we had a very important reading of first look third quarter GDP, gross domestic product. The reading came in at the U.S. GDP grew by 4.9%. It's a smoking number, very, very big. It is a little bit above what the market was banking on at 4.3%. So it's showing through these numbers that the economy is still in expansion territory. And this is what the Fed has been fighting, trying to keep it to a neutral or contraction. Now, the real interesting thing is when you dig deep into this GDP number, as we'll see in following readings from it, this is the first of 3 readings, there are some one-off items that contributed substantially to this GDP growth. Believe it or not, Taylor Swift concert and Beyonce concert were so big in sales and producing revenue and sales that it actually affected the GDP of the country. Kind of amazing there. The strong GDP, was really partially due to the, like I said, the increase in consumer spending, and there was another very large contributing factor, which was, shocker, government spending. Yes, that's still having significant impacts. So we see these temporary or one-off things being transitory, and there's a very high likelihood we could see a significantly reduced number in Q4 or potentially a negative number in Q4. We'll wait and see how that does. Durable goods orders in August were up 4.7%, much stronger than the market figured. But this figure was heavily influenced by aircraft orders. When you remove that from the index, we were only up 0.5%. So the market needs to dive deeper into these numbers than just seeing headline splashes. And also, let's hope the Fed does their due diligence on these numbers and not just look at headline. The next big number, initial job claims. This has been something that's been kicking us now for 8 weeks or so. This week, we're showing some weakness in the employment sector. Initial jobless claims were actually up 10,000 to 210,000. That's still not a big enough number realistically to have the economy where the Fed wants it. There needs to be a reduction in jobs. So that creates a contraction on the economy. Contributing claims, this is a big one, rose by 63,000, brought us to an annualized pace of 1.79 million. Now, this has risen by 132,000 over the last 6 weeks. This is that little spark that we're probably starting to see with contraction in employment. Pending home sales. Now, you remember yesterday was new home sales. Susie Orman was beside herself that it showed a positive number. Lo and behold, again, it's not what the media thought it was going to be. Pending home sales rose 1.1% in September, which was stronger than the decline of 2% that was forecasted. Yeah, this is something that came as a shock to many in the media because they're not doing their homework properly. We in the mortgage industry and real estate industry know that there's not a contraction on values or buyers. There's a limit of homes for sale. If we had enough homes for sale, we'd be having a ton of activity. Core Logic, which came out and gave their September results on loan performance. That came in August, and overall delinquencies remained near record lows. The 30 days or more delinquency fell back from 2.7% to 2.6%. 90 days delinquent fell slightly from 1% to 0.9%. Think of that, 0.9%. The lowest in almost 25 years. Those in foreclosure stayed just off the lowest ever rate of 0.3%. It's showing the strength in real estate, and it shows that there is so much equity sitting in the homes that people aren't just going to walk away from it. So tomorrow, we're going to get the all-important PCE report. Some of the previews to give you some expectation. Cleveland Fed is expecting the headline PCE number to stay at 3.5%. And for the core rate to decrease slightly from 3.9 to 3.7%. So we're seeing consistent headway on that. Although it's not huge headway, we are seeing some headway. Now the market is saying very similar to that, but they're seeing a little bit higher decrease in the core than what the Cleveland Fed is. So today we've got mortgage-backed securities in the green. Thank goodness we've got positive news there. That's up 15. Sorry about that. That's up 15 basis points. 10-year Treasury is down slightly, and it's battling the 4.9% level. We're down from where we capped out at 5.01. And if we can get a little bit more headway, a little bit more positive tailwind tomorrow, we might see that dip closer to 4.85 tomorrow. Let's hope we get that. Today is also continuing earnings season, specifically in the megatech. The Magnificent Seven are showing earnings. Now, pretty much across the board, their stocks are down. They're seeing neutral earnings with a potential for a little bit of a retraction. So those megatechs are showing maybe the first signs of the contraction that we were expecting. Now, that generally gives us a look into the future, maybe, of a shift from equities into bonds. That would help get us back, again, some of our losses and put some pressure on the shorts to get out of their short positions in the bond market, which, again, would help us. Hope this helps you out and explains everything going on today. Give us a call, 616-293-2189.